Oh, is she? Well,
Yeah.
we called to schedule your review, so we'll have to do that again next week and try and set something up.
Okay, sounds like a plan.
Yeah, I look forward to chatting with you.
Awesome. Thank you, Ms. Rita. Good evening, Sylvia. Thank you for joining us. Nice to virtually see you. We have Ms. Jain Williams here. And Ms. Jain, thank you so much. I'm a hugger, so virtual hug. I appreciate you coming here. I'm super excited to have you join us for the East Oakland SuSu Lending Cycle program. So now that it's 6 of us, I feel like we can just kind of get started. Miss Rita, E.G., Sylvia, thank you so much for being here with us, the East Oakland Collective. For those of you who are unaware who I am, my name is Tatori Nicole. I am the Executive Administrator for the East Oakland Collective. I am also joined here by our Executive Director, Miss Candace Elder, who is right behind the EOC logo here. And this evening we are joined for, I think it's our 7th or 8th workshop for this year's program, our financial literacy series as part of our East Oakland SuSu Lending Circle program. We've had several different speakers come and join us, to discuss understanding credits, home buyers, first-time home ownership, oh my goodness, budgeting, and so many other amazing things. And so today we are super excited to have Ms. Jain Williams here, a representative of State Farm, to talk to us about something that is super important for everybody, and that is insurance. So without further ado, Ms. Jain, thank you. You have the floor.
Okay, do I need to share my screen?
Yes.
Okay. Is the right one up to Tori?
Yes.
Okay, great. Okay. Good evening, everybody. I'm so glad to be here, and thanks to Tori for inviting me. Appreciate speaking before the East Oakland Collective, and hopefully you'll get some good information from me tonight. Okay, just a minute. So I'm Jain Williams. I'm a local State Farm agent here in the Laurel District. I've been here over 30 years and have worked with individuals, families, and small business owners to protect what matters most to them, to make sure that they have the correct insurance plans in place to protect them from any exposures that they have. So tonight, I'm going to really talk about insurance and why it's important as a part of everyone's financial plan. Insurance isn't the sexiest thing to talk about, but it's one of the most important things that everybody needs to be aware of so that they get it right. So this evening, I'll talk about why do you need insurance? And then I'll go over some of the different insurance products, starting with auto insurance. I'll cover renters, home, condo insurance. I'll talk a little bit about life insurance, which is actually one of the most important insurances that you can have. Give you some recommendations, and then kind of summarize what we talk about this evening. So why do we need insurance? What I've seen is one uncovered unexpected loss can be really devastating and ruin you financially and be hard to recover from. So these are some of the things that cause these devastations to you. An at-fault accident where you're responsible for compensating the party that you injured. An uninsured motorist accident where you're hit by somebody that doesn't have insurance, and then you may have bodily injury, you may have damage to your car, and you won't get any compensation from this person, so then you have to foot the bill yourself. Unexpected fires in your apartments or in your homes where you lose everything. Thefts, we see a lot of those right now. There's a lot going on in Oakland in terms of thefts these days, unfortunately. And then an unexpected death where someone dies who is really participating in the financial well-being of the home, and you've lost that income, and then what do you do? So where will you get all of the money to pay for these things if you don't have insurance? It could be actually quite devastating. Insurance helps you recover from unexpected losses. If you don't have the proper insurance, then you will have to pay for it yourself, but having insurance makes it so that we use the insurance company's money and not your own, so that you can just sit back and let the insurance company handle everything and not worry about it and not have to dip into your funds. So if you don't have insurance, what happens when you have to use your money? And please, if you have any questions along the way, just ask them and interrupt me. I want it to be interactive. But what happens when you have to use your money unexpectedly? Well, then you've got to take it from a couple of different buckets. Maybe you have to use the money that you've got saved for paying your rent that month or paying your mortgage. You might want to buy a home and you started a home purchase fund, so you might have to dip into that. Most likely you've got a savings account with some funds in there. If you have an unexpected loss that's not covered, you will have to dip into your savings. We all like to go on vacation, and so many of us have vacation funds that we put into so that we can accumulate enough money to go to Hawaii or wherever. You might have to dip into that. And heaven forbid you have to dip into your retirement, because the repercussions of that are really just tragic. You might not have enough money when you retire if you have to keep dipping into your retirement money to pay for unexpected losses. Or you might have to borrow money from a family member or a friend. And that's really not a good idea. Who wants to do that? If you own a home, you might have to put off repairs on your home or put off repairs on your car. And all of these things, if you're using your own money, then that's just delaying you reaching your financial goals of retirement, education for your kids, going on that vacation. You'll have dreams deferred when you have to use your own money. So with insurance, you get to use our money. We will pay for all of the unexpected losses. You will have the money that you've saved to meet your obligations. You can continue to put money into your savings account. You can go on that vacation that you were planning and enjoy yourself and de-stress from working every day. You can continue to contribute to your retirement fund or your house fund. And then your life can just go on as planned. You won't skip a beat. So the first thing I'm going to talk about is auto insurance, which I'm sure most everybody has a car these days. But there are a lot of crazy drivers out there. There are a lot of people out there without insurance. There are a lot of people out there with expensive cars. So why do you need auto insurance? Well, obviously it's going to protect you if you hit someone else or something. Maybe you run into a building or a light pole or a retaining wall, something like that. Or if someone hits you and your car is damaged or you are injured and you can't work, insurance will provide funds for you to recover from these. But what if your limits are too low on your insurance policy? And I see this all the time with people that they don't really understand what their insurance is covering. They don't even understand what they have. Oftentimes when people call me and they want to switch companies, I ask them, well, what are your limits? What do you have? And most of them say, I don't know, I'm not sure. So then we have to go look at their declaration page, see what they have. And many times they are really underinsured. Now, the reason this is important is because if you're at fault in an accident and injure or kill someone, you're responsible for compensating that family. So maybe you killed someone that's a law partner with 3 kids and is making $300,000, $500,000 a year and is only 30 years old. Well, you've got 30 years worth of income to replace for that family. Or if they're disabled and can't work a while, you've got to pay for their lost income while they're disabled. And if you don't have insurance, you can have your wages garnished 50% for 20 years. And who can live off of 50% of their wages? I know I couldn't. I'm sure most of you couldn't as well. So that could be really devastating, but people don't realize that. I have a lot of clients that say, oh, I don't have anything. There's nothing for them to take, not realizing that their wages can be garnished. But in addition to your wages being garnished, your other assets are at risk as well. So if you have a savings account, they can go after that. If you have a retirement fund, they can go after retirement. If you own a home, they can go after the equity in your home. Anything that you have as an asset is fair game. What the lawyers will do is give you a demand letter and say, tell me everything you own and that's what they'll go after. So you want to make sure to protect your livelihood that you've got, again, the proper insurance. So I wanted to go over the basic components of auto insurance, just to make sure everybody understands that. We'll talk a little bit about liability and property damage and what that is. Medical payments is available in your insurance policy. Comprehensive and collision, most people understand that, coverage for your car if it's stolen or in an accident, and the uninsured motorist protection. So starting off with liability. So this is what you have if you're at fault in an accident, if you're negligent, and as I said before, if you injure or kill someone. So these two usually go together, liability and property damage. Property damage is what is used to pay for the car or multiple cars that you hit in an accident. Now, the state minimum is what we call 1535. So you may see these numbers in your policy, but the first number is what you would pay any one person that you're responsible for injuring. So you'd have $15,000 to pay for one person's injuries, $30,000 to pay for everybody's injuries in the accident, and only $5,000 to pay for property damage if you damage someone's car. And lots of times today, a dent can cost $5,000. So 1535, as I said, is the state minimum. That's what you need legally to be on the road, but it is not really sufficient. I only do 1535 if someone tells me that's all I can afford. Normally, we start with at minimum 25, 50, 25, which means you'd have 25,000 for any one person's injuries, 50,000 for everybody in an accident, and then 25,000 for any property damage that you do. But as your income goes up, as your assets increase, if you own a home, you really need to increase those limits. So the next step would be like 50, 150, 100, 300, 100, and for homeowners, we usually recommend at least 250,000 for any one person's injuries, 500,000 for everybody, and then 100,000 for any property damage. And then after that, depending on the equity in your home, we then do recommend a liability umbrella that starts at $1 million of coverage. Because if you are in an accident, if you have equity in your home, you can be forced to sell your home to pay the damages. And then where will you go? Because if they've taken your home, they probably have taken your other assets, then your wages may be garnished as well. So that's kind of an understanding of how the limits on the liability work. Then the property damage is the last number, which was the 5, 25, 50, or 100, and that's what you have to pay for cars. So you may hit a single car, you may cause a chain reaction that hits this car and then the one in front and the one in front. There are a lot of expensive cars on the road, so many Teslas, BMWs, Mercedes, that the 5,000 limit is not enough to carry to replace or repair damages to a car that you're responsible for. I usually like to have at least 50,000 for that. And you can kind of play around with the premium and see what the change is. To go from 2550 to 5100 is not that much extra. So really, these are kind of like the most important part of your auto policy, the liability limits that you have. And again, it pays the damages you cause to people, cars, and objects. You may be responsible for someone's lost wages, as I mentioned. So you injure someone else, you're responsible for that, but you may get injured in the same accident. So you need to make sure you have a plan for yourself if you get injured as well. Now, that's not included in these limits that I'm showing, but that's just something that you should be aware of. Medical bills would be your responsibility if you injured someone, and that comes out of the liability. Pain and suffering is something that you could be responsible for, mental anguish, that kind of thing, and repairing the cars and repairing the objects. So again, choose your limits based on your assets and your income, because that's what's going to protect you. Medical payments is a part of your auto policy too. Many times people have $1,000 per person or $5,000 per person. If you have medical coverage through Kaiser, Blue Cross, or some other plan, then you may not need a lot of medical coverage. It covers you and your passengers. So If you routinely carry a lot of other people in your car, you might want to beef up your medical payments coverage, but it covers things like injuries, medical treatments. If you have whiplash or something like that, it will also pay for chiropractic care if you need that. If you need a massage for those soft tissue injuries, it can do that thing as well. So it is a flexible coverage. And we go from 1,000 all the way up to about 100,000. But again, most people, if you have medical coverage, you may not need to have that much. It's an individual decision. Comprehensive and collision is coverage for your car. So if it's stolen, or if it's vandalized, or if you have glass breakage, then that's what the comprehensive coverage does for you. Usually the deductible on comprehensive is lower than collision, just because the price for comprehensive coverage is not as great. Collision will cover damage to your car, and there we see deductibles from $250, $500, $1,000. The higher your deductible, the lower your premium is going to be. Very rarely do we go higher than $1,000 because then it just becomes a little hard for people when they have to come up with that amount. So that's the amount that you absorb in the event of a loss. So if your car is damaged at $5,000 and you have a $1,000 deductible, we would give you a check for $4,000. A lot of people think that they have to pay that deductible to the insurance company. And so they're a little wary on higher deductibles. That's not true. You just have to you have to pay that amount to the body shop and we'll pay them the rest. You look at your collision coverage as your car gets older. If your car's 15 years old, if it doesn't have that much value, at some point you can consider just eliminating the collision coverage at all. It's many times a good idea just to still keep the comprehensive coverage because it does handle glass breakage for you, even if the value of your car is not that great at that point. Uninsured motorist coverage. As I mentioned, and you probably all know, in California, there are a lot of people driving around without insurance. And what that means is if they hit you, they're not going to be able to give you any money for the damage to your car, or if you were injured, they're not going to be able to help you with your medical bills. So it's important to have uninsured motorist coverage on your auto insurance. You do have the ability to waive it if you want, but I don't recommend that. Now, the uninsured motorist liability limits follow the limits that you have for the liability. So you could have, if you have 1530, you'd have 15,000 for any one person's injuries, 30,000 for everybody, exactly the same as we had for the liability. Those should match. You should not have them lower, because if you have your uninsured motorist limits lower than your liability limits, then you're giving yourself less coverage than you are providing to someone else. And again, it will pay for if you're hit by somebody uninsured, and an uninsured person is defined as you've gotten their driver's license number, you've gotten the license plate number on the car, you've gotten their name, some of that information, so that we can verify that they don't have insurance. Uninsured does not cover hit and runs. You have to be able to give us some information on the car in order to trigger this coverage. But it will cover your medical bills if you are injured, again, lost wages. One nice thing about the uninsured motorist coverage, say you have an older car and you do not have collision on it, the uninsured property damage coverage will give you up to $3,500 to repair your car, which is a nice benefit. And if you do have collision, say your deductible is $1,000 and you're hit by someone uninsured, and we verify that, then we waive your deductible so that you're not responsible for that at all, which makes it nice in the event that you're hit by someone that's not insured. So how is your premium determined? We get that question a lot. There are a lot of things that go into it. The number of years that you've been driving. So what we call youthful drivers, drivers with less than 9 years of experience, their premiums are quite a bit higher than people driving longer than that. So the more years you have driving, the less your premium is, until you get to a point where maybe you're like in your 80s, and I forget the exact year, but as you get that old, then as our reflexes kind of are slower, we may not drive as well, then the premiums go back up again. If you've had any at-fault accidents on your record, we go back 6 years, and many insurance companies do their underwriting different, so the number of years we look back might not be as everybody else does. So at-fault accidents are a factor. If you've had any moving violations in the last 6 years, we count those. Stop sign violations, red light violations, speeding, that kind of thing. And then the year, make, and model of your car is taken into consideration. So obviously, a newer car, the insurance on that's going to be more expensive than a car that's 10 years old. But we do look at things in terms of when we look at comprehensive premiums, we factor in things like how easy is it for your car to be stolen? What's a popular car to be stolen? We also look at how cars fare in accidents, which ones crumple up more than the other ones. So a lot of those things are taken into consideration. But the year, make, and model of your car is a factor. The number of miles that you drive annually is taken into consideration too. The more you drive, the higher your premium is going to be. And it can change over time. You may drive a lot this year because you're going back and forth to LA and you're not doing that anymore. And so then your premium the next year may be less. So we usually take a snapshot on an annual basis to look to see how many miles you're driving annually. It did change a lot in COVID, and you may have seen some companies gave refunds back to clients because the driving was a lot less with people staying at home. But this is something that we consider. Your address does impact your insurance premium as well. And it's just one of all of these. So it's not necessarily, it's not the major factor, it's just one of all of these factors that we look at. And then there is also something called a California Good Driver Discount. And that's mandated by the state of California. So if you have more than one at-fault accident or one moving violation in the last 3 years, you cannot get the California Good Driver Discount, which is a significant discount. It's about 20%. So you can have one. So with one in the last 3 years, you're okay, and you can get this discount. When people lose it, it significantly increases their premium. So what kinds of things can you do to manage your premium to keep it lower? Because I know clients spend a lot on insurance, with home insurance, auto insurance, life insurance. It can get expensive. So we're really mindful of that. So we work with clients to try to manage their premiums. So with auto insurance, the one thing you can look at is your deductibles. $500 or $1,000 on a collision deductible will help keep your premium lower. And again, that's the amount that you absorb. As I mentioned before, the comprehensive deductible, there's not as much swing in that because that premium is generally a lot lower than the collision deductible. But if you have multiple cars, you get a multi-car discount that can give you some savings. And one of the best things to do is bundle your insurance. So whoever has your auto insurance, they probably will give you a discount if you have your home or your renter's insurance with them as well. And you can get a discount on the home and the auto, so it can be really significant. Longevity with a company is a factor as well. There are loyalty discounts or multi-year discounts that you can get with the company for being with them for a long time. And one thing you can do is look at your coverages, and as your car gets older, you can look to drop collision on your cars. That can give you some savings as well. Any questions on auto insurance at all before I go to the renter's insurance? Okay, so I'll move on to renter's insurance. This is a great policy to have if you do rent. And a lot of people are under the impression that their landlord is going to take care of them if there's some kind of loss, but that is definitely not true. The landlord will only help you if the loss was caused by some negligence on his part. But if there's a fire, some water damage claim, don't look to your landlord. The responsibility is yours. So you are also responsible for losses that you cause to your own premises. So If you start a fire, which is kind of probably one of the most common claims we have on renters, or if you let your tub overflow and go down into the next unit and damage the floorboards and all that, you're responsible for that. And you're responsible for your stuff. So if there's a fire and you can't live there, sometimes places are red tagged and you can't go back in and get your stuff, or it could just burn up. You're responsible for that. Your landlord is not. And renter's insurance is very affordable. People don't really realize it. It starts at about $11 a month, or $130 a year is our annual premium for our lowest policy. And it is based on the value of your content. So you tell us how much stuff you have. So you could have 10,000 worth of items, up to 100,000. Every person is different. But we look at covering your furniture, clothing, TV, stereo, pots, pans, all of that, purses, anything that you take into your apartment, that's what would be covered under the renter's policy. And we cover you for fire, theft, and vandalism. So if there's a fire and your items burn up, if you're burglarized and someone steals something from you, that's covered. And vandalism is covered as well if someone comes in and just throws eggs all over your things. Liability, if you cause damage to your unit. In my experience or in my career, I've had several fires where my tenants have started. I've had several instances of people cooking on the stove, walking away for extended periods of time and starting fires. I've had fires where people have had candles in the bathroom with them and then laying in the tub and fires started. So whatever damage they cause because of that, then they are responsible to pay the landlord for that. So the liability coverage in your renter's policy will cover that for you. If you have a friend or someone over your home and they slip and fall because you had water on the floor or a skateboard on the floor, the liability coverage will take care of that as well. And all of our policies come with $100,000 of liability. Medical payments is really something we call a courtesy payment. So if you have someone that is injured at your home, but it's not your fault. We had one client who was helping his sister move and was going up the stairs and hit his forehead on her door jamb and was knocked unconscious and had to go to the hospital. So because he was injured in her home, we paid for that. I had another client who had a party and one of her guests fainted and chipped her teeth. It was not due to my client's negligence, but we paid for her teeth to be repaired as well. So we don't actually, I have not had as many claims on the medical payments, but it is something that's just a standard part of the policy. One of the biggest things is extra living expense. And so that is, say there's a fire in your unit and you can't stay there, we'll pay for you to go stay in a hotel temporarily while your place is being repaired. Quite often on the news, you see people standing outside with blankets after fires and they're being helped by the Red Cross. And so I tell my clients, you don't have to go to the Red Cross gym. We will put you up in a hotel. So that's a really, really nice benefit of the policy. And again, so affordable, it starts at $130 a year. They can get up higher, $400, $500, $600. It just depends again on the value of your contents. Now, home insurance is similar to renter's insurance, except we cover the dwelling. And what we do for the dwelling is try to have enough coverage to rebuild your home. So we look at the cost of construction, which has gone up quite a bit in the Bay Area over the last 5 years because of all of the wildfires we've had. And labor rates have gone up and the material prices have gone up as well. So what it might cost to rebuild your home 3 years ago even is probably a lot more today just because of the inflation for everything related to rebuilding. So it's important if you do have a home to relook at your coverage, especially now since the increases have been so dramatic, and make sure that they are adequate. So whenever I have a new client, that's the one thing that we do is just when we are writing a new policy, make sure we've got enough to rebuild their home. Building ordinance coverage is really important in a home because we are designed to rebuild like, kind, and quality. But most likely, if you have an older home, the city's going to make you rebuild back to code. It could be something like, well, putting sprinklers in is very, very expensive, but that's a requirement now. Double pane windows, sometimes you have to put rebar in your foundation. Electrical wiring is a big one. So any of those things have to come out of the building ordinance bucket. So you want to make sure you have that in there as well. And then the other coverages are just similar to what's in the renter's policy. The liability, the medical payments, personal property is going to be a percentage of your dwelling amount. And then we have extra living expenses as well. But if you do own a home, then the liability coverage that you have should be higher than if you were a renter, because again, you have more to lose. You've got that equity in your home that you have to protect. So you want to make sure that your liability is high enough. Wanted to give a couple of examples of claims that we've experienced. Just so you know what the policy does. We've had quite a few water damage claims, most in apartments and condominiums mostly, for people that have are stacked on top of each other, because water finds its way all down whenever there's a leak. So we have a lot of clients that have caused damage to other units or have been damaged by water leaking from above. Maybe their clothing was damaged, their furniture, those kinds of things, and we repair that. Smoke damage is quite common if there's a fire, especially if you're in an apartment, and it might not be a fire in your unit. It could be your neighbor has the fire, but then the smoke makes its way into your unit and the smell gets in your clothes and all of your furniture. So we would, our policy would take care of that. We would clean those items for you. If the smoke can't be taken out, then we would replace them. Like I've said before, we've had a lot of fires, and I have 2 fires recently in homes that were started. They were both because of faulty electrical, because the houses were old and the electrical hadn't been upgraded. So electrical fire started, and one house was completely totaled, and then the other one, she was able to move in a lot quicker, but we had significant damage there. We have had a lot of claims from candles starting fire, and again, people cooking food, walking away, going to sleep, damage from other units causing damage into your unit. Lots of claims on that. Burglaries, we've had a lot of those. We've had a couple of, not recently, the home invasion claims, and then just regular burglaries in your home or burglaries out of your car. So the homeowners or renters policy will cover you if some of your items are taken out of your car. Laptops, that was something that was going on a lot last year. People sitting in coffee shops and their laptops getting stolen, but we cover things like that. Living expenses for forced evacuations. People, especially in the Santa Rosa fire, we had several of our clients who were renters that had to leave because the fire was coming their way. They were forced to leave. So in that case, we paid for them to stay in a hotel. Medical bills for injuries on your premises not caused by you. I talked about that. And then damage to other people's property. So if you have something of a friend, you're using it and you damage it while it's in your use, we can repair, replace it. I had one client who was visiting a friend and damaged her glass table, and we replaced the table. So those are just some examples of the kinds of claims that we pay. Let's see, now I'll go on to life insurance, which is, I say, one of the most important things that people can have. But
Jane, I'm sorry, I don't cut you off. I'm sorry. We have a few questions.
okay.
Q&A in the chat. So the first one is actually from one of the participants, E.G. Her question is, would rental insurance be considered for saving? Was her question. That's the first one.
Would it be considered forced savings?
Yes.
No, it would not be considered saving. I'm not sure if I understand the question. Can you elaborate on that?
Let me see if, E.G., would you like to ask your question directly? I can give you access to speak.
Can you hear me?
Yes.
Okay. What I mean is saving on, like, for example, I have an auto insurance, and if I include my renters with my auto insurance premium, would I get a discount on that, is my question.
Okay, yes. So with State Farm, you would get a discount on both your auto insurance and your renter's insurance. And some other companies offer the same discounts. Sometimes with some companies, you may get it on the auto insurance and not the renter's insurance. So it depends on who the insurance company is. But with State Farm, yes, you do get both. That's why it's nice to bundle them together because you can get more savings.
Okay, and you don't have to start them the same time. You know,
No.
you can add the renters to your auto.
Yes,
correct?
absolutely.
Okay.
And vice versa, you can do the renters and then bring the auto over later.
Okay, thank
But
you.
you don't get the discount until you do both.
All right. Thanks.
Is there another one to Tori?
Yes, Candace, did you want to ask it or did you want me to read it?
Sure, I will ask it. For renters or home insurance, should we create an inventory of items in our homes? And if so, how detailed should we be?
Well, it is good to have an inventory. The easiest way to do it is just to take your phone, walk through your house and take pictures of everything. Because the reason you want to have an inventory is if you have a fire, you're going to have to tell me what you had. And if you don't know what you had, I can't replace it for you. So by taking a picture or making an inventory, that'll make the process easier. You can keep manuals for TVs and things like that. That's helpful. But if there's a fire, a lot of that may burn up. So an inventory on a computer, or like I said, going around, taking a video is good as well.
And another question I just thought of, it came up for me a little while ago. Does State Farm offer like pet insurance, particularly if you have like a bully breed dog?
Yes, we do. We offer pet insurance through Trupanion. So we do that. And you can see it on our website. If you go to statefarm.com, there's information on all of the insurance that we provide, and you'll see the pet insurance on there.
Thank you.
I know we all love our pets. I've got my dog is here and I closed the door so he wouldn't come in and start barking.
Nice. I think that was all of the questions for now, but if there are any more, please feel free to raise your hand or drop them in the chat and we'll be sure to try to get them asked for you.
Okay. All right, so let's see. I'm not sure how to go back. My screen is one more than it should be, but I'll just kind of talk from the screen that's not showing. But life insurance is really important, but it's the thing that people shy away from the most. And it's often the most deficient insurance that we have. For whatever reason, people just don't think about it. But it can be really devastating if you lose a loved one who's providing income for your family that you all are relying on, and that person's not there anymore. What do? You've lost that income, and then there are a lot of consequences that happen. But having the proper life insurance helps your family maintain their lifestyle so that they can live normally while they're grieving the loss. If you have to worry about where you're going to live or where money's going to come from after a family member passes away, you can't really do the proper grieving. So life insurance kind of helps with that. If you don't have life insurance, I've seen people do lots of things. I've had people call my office and say, my dad passed away. Did he have any life insurance? Because they're just trying to figure out what they're going to do. Is there anything anywhere? I've had clients pass a plate at church to get people to donate because they don't have any life insurance. Borrow from family and friends. GoFundMe accounts are really popular now for when someone passes away. You might have to move to a cheaper place. You might not be able to keep the apartment or home that you're in. And you just might have to live a reduced life because you don't have the funds to maintain your lifestyle. You can't have your normal standard of living. And none of these are really good alternatives. So that's why life insurance is so important. So I want everybody to kind of close your eyes and think about pretend you didn't make it home last night, or your loved one, your partner didn't make it home last night. What will you do? You've lost them, you've lost their income. And that's what people seriously have to do, just kind of visualize, I'm here by myself, or I'm not here and my family's without me, what's going to happen to them? So you have to think, how am I going to make my obligations for rent and mortgage? You've got food and clothing that you have to take care of. You've got to pay for insurance, gas, and utilities. If you have young children, you might want to have a college fund for them, plans for them to go to college, but with that one less income, that may not be a reality. So you might want to take care of that. Life insurance is what replaces your income if something happens to you. But how much do you need? How do you determine that? So first you have to think about, if I pass away, or my spouse or significant other passes away, how much of that income do I need? So if my spouse passes away, do I need his or her income for 5 years to get back on my feet? Do I need 10 years, 20 years? Do I need it forever? Will I ever be able to compensate for that lost income? 5 years is a good starting place to think about, but you need to go through that exercise of, I've lost this income, I'm living on this amount that I make, how am I going to make up that difference? So maybe I need life insurance for that amount for another 10 years or however long. So the main things to look at when you decide how much life insurance you want is, what is that lost income? So my husband makes 50,000. Well, I really could get by on 25,000 of it. So I need it for 10 years. So I need 250,000. Or he makes 100,000, I need it for 10 years. I need $1 million. So just kind of go through that exercise. Do you need it all? And then how many years do you need it for? Look at your housing costs, a rent fund or a mortgage fund. And can you absorb that by yourself? In most cases, it's no. Again, how long do I need that for? And then education for my kids. College is really expensive, and especially if they're young, they have a lot more years, and inflation is going to be even higher. So do I want to account for that? Then you total all these numbers up, you get a grand total, and it could be an unbelievable amount, but at least you know what you need. And then once we have that amount, we start chipping away at it on what is affordable for you. And many people buy 7 to 8 life insurance policies during their lifetime. A lot of people don't realize that. They think you can only have one, but you can get 7 to 8 of different life events. So you get married, you get one. You have the kid, you have another one. You have another kid, you get another one. You move to a different house. Your income goes up with your job. You need to replace more income. So there are different triggers that cause you to get more policies, or even, I'm starting with a small amount now, but I'm going to add to it next year or the year after. But don't think you just have to have one policy. A lot of people tell me, oh, I have it at work, I don't need any more. Well, that's not really true. You have to think about that, because having it at work, it is a really good benefit, and the rates are great because they're group rates. But normally it doesn't provide enough. Usually life insurance at work is 1 to 2 times your salary. And so that means, okay, you have 2 years of that person's income. Is that going to be enough? Most likely no. So you should have some outside of work that you control yourself. You never know, you may have it at the job now, but what if you take another job and they may not offer life insurance, or there may be a waiting period? You want to get some that is not beholden to where you work. Then I get questions, should I get term or whole life? And I'm doing okay on time. So Tori, I think it's, how much more time do I have?
Oh, you're perfect. You have.
Okay. Okay. All right. So people ask me, should I get term insurance or should I get whole life insurance? And it really doesn't matter. Again, it's a personal choice. Term insurance is temporary insurance that usually you get for an event like, I want to have enough for my mortgage, I've got this allocated for education for my kids, or I have this for lost income and I need it for this period of time. It is less expensive, but it's for a certain term. 10, 20, or 30 years are the normal term periods for term insurance. It's less expensive than whole life, but it does the same job. They both provide a death benefit. Whole life is more expensive, but it lasts your whole life, so it won't run out. So if you're 40 and you get a 10-year policy, it'll go to age 50, and then you've got to get another policy after that. With whole life, once you get it, you have it, and the premium stays the same forever. It doesn't change. The term policy, it'll stay the same for 10 years and then it'll go up, or it'll stay the same for 20 years and then it will go up. Whole life, it is just flat. It does build cash value as well. That's money that you can borrow against, which is nice. Or when you get ready for retirement, if you don't need the death benefit anymore, sometimes people surrender the policy and take the cash value out.
You have another question. Miss Rita says, sounds like you can purchase life insurance from different companies. Is that true? At our age, we are more considering for paying for burial costs.
Yes, you can have a policy with State Farm, you can have a policy with New York Life, you can have a policy with Metropolitan Life. It doesn't matter, you can have them all over. There are, I didn't put it on here, but there are final expense policies that we have that provide coverage just for that. They're for $10,000 for people that want to have something for burial. Maybe they don't need a large amount, but they just want to take care of burial. And we have those as well, but you can definitely get them from multiple companies. So there is a hybrid approach as well, where some people like the benefits of whole life, but it's a little more expensive, more than they want to spend, and they need a lot of coverage, so it's easier to get it with term. So sometimes they do a combination. So, you know, you might get a 25,000 whole life policy just to get something that's locked in that you'll have forever. And then you might get 500,000 in term insurance because it's going to be cheaper, and you can balance your premium and kind of have a little bit of whole life, more term insurance. So really, I just kind of work with my customers to see what they prefer and what they can afford, because you always want to get what's affordable. It doesn't do you any good to overreach and get something where the premium is too high and then you find out you just can't keep it and cancel it 6 months from now. Then your family's left with no protection. So I always say get what's affordable, start a plan, then you can always add to it. One nice thing about our term policies is that they are convertible to whole life. So if you do get term insurance, at any point in time while the term insurance is in place, you can convert all or a portion of it to a whole life policy without having to show medical eligibility again. And that's nice because when you get your policy, your health buys your life insurance. That's why if you want to get it when you're young and in good health. We are able to take people with high blood pressure, high cholesterol, all those kinds of things. You still can get life insurance, just maybe a little bit cheaper without some of those things, which is not to say you still can have high blood pressure that's maintained and get a standard rate. Everyone is looked at individually. We take a lot of things into consideration, including height and weight, blood pressure, cholesterol, prior history, if you had any heart attacks, that kind of thing. But your health buys your life insurance. So I always try to encourage people to get it when they're young and healthy, and then they'll have it for the rest, they can have it for the rest of their lives. One thing to look at on the life insurance that you have is the beneficiaries, and this is something that's really important. Many people start life insurance policies and never look at the beneficiaries again, but things do change. You get to choose a primary and a secondary beneficiary. So you name one person to get your death benefit, and if they don't survive you, then you name a secondary person or persons. Now, if you are naming someone that is under 18, then you want to name a custodian. Otherwise, the child cannot get the money until they're 18 years old because they're a minor. So always look at a custodian for a younger child. But review your beneficiaries because, like I said, things change. You might get divorced and you still have your ex-husband listed on your policy, and most people don't want their funds to go to their ex-husband. You might have one child listed on the policy, but you had a new baby and you need to add the second person on there. You might have someone on that already has passed away, so you might need to update it. So review your beneficiaries every few years just to make sure that they are still who you want them to be. I get asked a lot, well, which one is better, term or whole? Which one should I get, Jane? And so I always say the one that you have in place when you die is the best policy to have. None of my beneficiaries have ever said, oh, did he have a term policy or did he have a whole life policy? They just are interested in death benefits. So it doesn't matter. One's not better than the other. It's all personal preference. Do you want to pay a lesser premium, or is cash value important to you? But they both pay out the same. So these are just a kind of a few recommendations that I have for everyone when looking at your insurance. You really want to work with an insurance professional. A lot of people are buying policies over the internet these days without any counsel. Well, it's okay if you understand the coverages and you understand what you need to insure for, and you've thought about what your risks are. But if you don't, then you really should work with a professional that's going to give you some guidance and understand who you are and what you have. Because you really want to look at, what do you have to lose? If I have this auto accident and kill someone, what are they going to go after? Well, I have a house, I have savings, I have a retirement. I need to protect all of that. Okay, so I'm going to make my limits accordingly. So you look at what you have to lose. On the flip side, that means, what do you want to keep? So I don't want them to go after this. So I want to make sure that I have the right insurance in place. So be knowledgeable about the limits you choose and be deliberate about them, and make a knowledgeable decision. You can use your deductibles to lower your premium. I'd say don't buy on price necessarily. Check out the company. You want to make sure that whoever you're with can pay claims, and how they pay claims, the service they give. Cheapest, as I'm sure you all know, is not always the best, but for some reason, a lot of people buy insurance based on the price, and all insurance isn't created equally. Try to bundle your auto and home when you can to get the discounts, and then review your policies regularly just to make sure you may need to make some changes to them. So in summary, you really want to protect your finances by having the proper insurance in place. We all work too hard to get the little bit that we have to throw it away because we don't have the right insurance in place. You don't want to let a loss devastate you because you didn't do the right thing. So take the time to make sure that your insurance plan is providing you the protection that you need, and the protection that you need changes over time. That's why you need to keep reviewing it regularly. So having the right insurance can help you have a bright financial future, and it will let you stay on track with the goals that you have, so that you can have a good retirement. You can go on that vacation. You can have enough money for your kids to go to college. You can do the repairs on your home. All those things that are important to you and that you want to do, you will be able to use the insurance money to cover those unexpected losses and not have to dip into your own. Any questions? I put my information up here. If anybody wants to call me, feel free. I'm happy to help out or give advice or information as needed.
I did have a question when it's more, it was about back when you were talking about auto accidents and uninsured motorists. And I believe you said that, like, oh, you have to have gotten the information from the folks, so hit and runs don't count. But if you were to have like a police report for a hit and run, would that change that particular part, or is it just
Well,
no?
generally, if you have a police report, it's going to have the person's name and some information about their vehicle. We just have to have some way to try to contact that person to see if they have insurance. And if you don't have anything, we can't do it. So we can't verify that they don't have insurance, but a police report will work.
Gotcha. Okay. And then maybe would that otherwise be counted as vandalism?
No, it's just going to be an accident. So it won't be an at-fault accident. It'll just be an accident. And so it would be covered under your collision. So you would be subject to your deductible. So if your deductible is $500, you'd have to pay $500 to get your car repaired. If we can designate it as a uninsured claim, it's still handled under the uninsured motorist coverage. You just won't be responsible for your deductible. Now, if you had a car that did not have any collision coverage at all because it was an older car, then with the uninsured motorist coverage, you get up to $3,500 to use to repair that car. So two versions. If you have collision, it goes one way. If you don't have collision, you get the $3,500.
Gotcha. Yeah, and an older car is probably not likely to be so much more than that, hopefully.
Yeah, you never know. Because I have some people that just self-insure, and even if it's a newer car, they say, I don't want collision. That's rare, but sometimes that does happen.
Right. Well, if any of you here who are watching or participating have any questions for Miss Jane, please raise your hand or drop them in the chat so that we can get them answered. But otherwise, I gather that is the end of your presentation. Is that correct?
Mhm.
Okay, so I will give you, maybe a good 20 seconds to throw it in there. If you have a question, raise your hand. Otherwise, Miss Jane, thank you so much. That was so helpful. Let me see. Miss Rita put, I took an 8-hour mature driver's class via AARP early on in this year. How long do you honor them? Does it go towards a discount? Is her question.
Oh, I'd have to check. It might be 2 years. I'm not sure. I can check and find out for you.
Thank you for that question, Ms. Rita. Anyone else? While we wait for some questions, if we have any, I want to thank everyone for joining us again this evening for this insurance workshop. Ms. Jane, for sure, thank you so very much for coming and joining us here. Thank you for all of the knowledge and information that you share with the community and your clients. And I'm pretty sure I myself and several others will be reaching out to you. This is our second to last workshop for this year's program. And so we would love for you all to join us for next month. That workshop is going to be on its standing day, which is the third Thursday of November, which is the 18th of next month. So November 18th, 2021, same time, 6 p.m. to 7:30, we will have our final workshop for the year. After the close of this workshop here, you will be prompted to take a survey. We would greatly appreciate it if you could complete that survey for us, because we'd love to host these webinars for you and want to make sure that we improve and get information out to you that you need and want. And of course, as an effort to listen to the people. So if there isn't anything else, Ms. Jane, did you want to add anything? Candace, did you want to add before we wrap it up? Okay, I will take that as my cue. Oh, EG, thank you so much for joining us. There's EG says, thank you so much for this workshop, Miss Jane. And yes, we thank you. Thank you so much.
Happy to provide the information.
I learned so much. With that said, I wish you all a happy fall. Please stay warm, safe, and dry. And I hope to see you all sooner than later. Good night.
Bye-bye.